Welcome back. Smurfit Kappa, a producer of paper-based packaging, just reported earnings for the last year, for the fourth quarter. We're now joined by Smurfit Kappa Chief Executive Gary McGann. Thank you, Gary.
Thank you very much.
Today, sum it up for us, the fourth quarter and 2014.
Well, the fourth quarter is difficult to sum in isolation. I think it's worth looking at the full year. We've had a good year. Volumes are up, prices are reasonably positive, good strong cost takeout program, good diversity across our different regions from Europe to Latin America and North America. And generally, despite the macroeconomic environment, paper-based packaging is a reasonably robust product area.
Tell us about your plans to reduce the debt level, something of a turnaround story at Smurfit Kappa then, in particular surrounding the debt.
Sure. I think in about 2012 we got a very clear message from the market that our debt was too high, the world had changed, the appetite for risk was significantly reduced, and so we committed to the market that we would basically get our debt below 3 billion and reduce our leverage to well below 3 times. And we focused on that for two and a half years, and basically since we IPO'd in 2007 we have delivered about 2 billion in free cash flow, reduced our net debt by about just short of 700 million, despite the fact that we were investing in our asset base, and got ourselves down to the leverage level where at the beginning of 2014 we redirected the market back to a growth strategy. So we have a strong balance sheet and a good strategy.
It's been a roller coaster ride, even not only since you joined, Gary, but since 2007 when you came to the market. I looked up this morning, at one point in October 2008, your shares were at 1.18 euros. They're at 22.5 today. You were worth 250 million euros then, weren't you, as a company? You're worth 5.2 billion. Paint a picture for us what that period was like and how you've managed to turn things around many years on.
Yeah, I think we were basically a victim of a very, very scared equity market. I mean, effectively our share price was at an option price. Our business, hugely asset-backed business, always profitable, always positive free cash flow. Very hard to understand how anybody would value that at €1 a share or just over €1 a share. We took a view that said we needed to address the concerns, which was basically leverage. There were no other reasons, and we did. Our IPO message was that we would basically grow the business with a dividend underpin, and we would have a leverage of 3.5 to 4.5 times. The market loved it in 2007, hated it in 2010, and so we changed it to 2 to 3 times now. The growth strategy is still the same. The dividend underpin, we've grown our dividend again this year by 30%, following a 50% last year. And basically that's a strong vote of confidence in the cash flow generation capabilities of the business. And most importantly, we believed in the message. We believed that core equity investors believed in the message, and it was a matter of time before we started to see the value being represented in the share price.
Markets can be a fickle business, can't they? What about the world of packaging itself? You say that what you produce is recyclable and is sustainable, but is it going to be as necessary in the future as it is, or as it has been in the past? Many businesses use it for marketing, of course, but there's also a push to reduce the amount of packaging used in general. So how do you sustain a growth model through that?
Yeah, I mean, I think it's a very, very good question. First of all, I think as a substrate, paper-based packaging is the most sustainable in the world because it's renewable, it is recyclable. But most importantly, it is the medium through which almost every product that's marketed, particularly in the retail markets, is marketed. And so that our whole focus going forward is to differentiate our offering from our competitors, and more importantly, work with our customers to help them sell more through the visuals and through the insights that we will get into their consumer markets. And so you can see we're winning business in our major multinationals, mainly by partnering them on a point of purchase strategy that actually optimizes the sale of their products. So when you put the transport packaging together with the marketing-based packaging, you look at the options for people who have to get their products to the market and have to display and market it on the shelves or indeed on the internet. The future for paper-based packaging is very, very good.
Europe, Gary, you're in 21 countries, yes? Yep. 11 in the Americas, so you're in Eurozone and non-Eurozone countries. How do you view the troubles taking place within the Eurozone, of which, of course, Ireland is a member because of Greece, and how that might spread and affect the economy in the Eurozone?
I suppose it's worth remembering that the Eurozone has had a very, very tough time over the last 3, 4, 5 years, and in fact has been extremely slow to recover from that if you compare it to the US, where we have business as well, and particularly where we service the US from Mexico. By and large, despite all of the challenges in the European marketplace, paper-based packaging has done well, mainly because our products and our customers' products serve the domestic market and the export markets. Europe, first of all, is the biggest consumer market in the developed world. It's 330 million people. Secondly, it has brands that are of international standards, so their export activity, of course, is very substantial. And thirdly, from our point of view, we package from the low-end, own label, cheaper products to the very high-end, differentiated branded products. So between our geography and the fact that we have from cradle to grave offerings in terms of the supply chain, so from trees through to the end packaging, or recycled paper through to the end packaging.
And that works for you, does it, that vertical integration?
Absolutely. It's a fundamental platform for our business offering. We believe passionately in it. It has smoothed our earnings in terms of the highs and lows. We don't have anything like the extremes some of our competitors that are long or short have, and it, together with our geographic footprint, has basically served us extremely well through the worst aspects of the economic downturn.
Gary, thank you very much for joining us. Good to speak to you this morning. Gary McGann from Smurfit Kappa Group, where he is the CEO.
Just want to